Are you struggling to make money trading in this bear market? Then this is the video for you, because I'm going to give you 5 tips on how to thrive and survive in this bear market while everybody else is stressing the recession.
Feed 'em if you're coming for me. Hope you're ready for a demon. I got eyes in the back of my head, I'm seeing. Take me for granted and you know I'm leaving. I'ma take what's mine.
All right, guys, let's jump right into it. 5 ways to survive a bear market plus bonus tips. I got a good bonus tip for you if you stayed to the end of the video. Always save the best for last, right? So let's just start off by saying this is a new YouTube channel. These are some of my newer videos. So if you're finding this on YouTube, please consider liking the video. Please consider subscribing and clicking that bell notification so that you can stay up to date when I post a new video. It'll really help my channel out. I really appreciate it. So let's hop right into this thing, okay? We got something we got to go over first, and that is the fact that I am not a financial advisor, right? Do I look like a financial advisor? Anything you see in here on this video is for educational purposes and for entertainment. I'm not telling you what to buy, when to buy, and even in my recap videos, my results aren't typical, right? So now that we got that out of the way, I also drink a lot of carrot juice, so that's probably why I look orange, and you're just going to have to deal with that. So hopping right in. All right, most of you, I'm sure there's a few veterans out there, started investing after the COVID crash, right? Because over the years, people have developed a decent financial IQ and know now, especially retail, that when the stock market sells off, when the housing market crashed, best time to invest, right? And if you bought at the COVID low, you found out that that was very true, because for the past 2 years almost, you've had a market on steroids. And what's happened is it's given you a misconception of how the market actually works, right? Without Jerome Powell, without, Big Daddy Fed pumping money into the market, it doesn't move like that. And you can see that the NASDAQ gained 72% in 115 days. That's insane. That's 4 times its usual pace. Okay. So it doubled in less than a year. And, looking at this chart over the last 2 years, for my fellas, you're in the club, you're doing good, hitting on girls every single weekend, the ladies, lip fillers, buying all the new stuff you want, shopping every day, right? The guys in the club. And then all of a sudden, Mike Tyson comes in the bar and gives you one of the most vicious overhand rights you've ever experienced in your life, okay? And that's what this is. This bear market is a sucker punch to those of you for the last year and a half thought you were the next Warren Buffett. The bear market is disorienting, especially after the bull runs we've had for the last almost 10 years. I mean, it kind of started in the Obama administration, right? The market's just been a straight missile for the last 7 or 8 years. So the first tip that I'm going to go into is don't overthink the market movement right now, right? Everybody just assumes because it's a bear market that you're just going to buy puts, right? You're just going to YOLO your account in puts and you're going to be profitable. That is the worst attitude to have. You can't just have a bear bias in a bear market, because look, it's punishing both sides of the coin, right? If you had tried to short this setup right here, you would have got slaughtered. Okay. And if you had tried to go long on some of these breakouts, you would have got killed in this chop. The misconception that a bear market is just straight sell off, just printing money via puts and short positions is very risky. And as you could see, the market's punishing everybody. So in a bear market, the direction is going to be harder to predict. The market is going to react to news differently. CPI came out, I believe it was yesterday. It was like a 0.2% miss on expectation. And the market just sells off pre-market, right? Insanely. And then just rips for the rest of the day, then sells off again. Like, you can't predict news like you would be able to in a bull market. One thing that's going to happen, and for you to not overthink, your A+ setups are going to fail, right? They're going to set up, they're going to fail, and then they're instantly going to work. It's just going to set up just enough to get you in, and then it's going to fail. A tip for that is just get back in, trade with low size and get back in. Your indicators aren't going to be as reliable. Things like bullish divergences, RSI divergences aren't working. They work sometimes, but they're just not working as good as they used to. Breakouts are going to fail in both directions. They're going to peak just above to get you in, and then they're going to sell off, right? The chop zones, the consolidations, the kill zones, the danger zones, they're going to increase and intensify. As you can see here in the SPY, we had an 8-day consolidation, and I imagine, I had a few bad days here. People were just getting murdered. Okay, these things are happening all over the place now, and they're going to continue to happen. Moving on to the next slide, don't use tight stops, all right? Trade with less size and take a wider stop. The last, year and a half of a bull market, look at the average trading range of these candles, right? If you're using tight stops here, you're probably good. But then when Mike Tyson come into the bar and gave you that hook, tight stops stopped working. Look at the range of these candles. I mean, the last 6 months has been insane. VWAP, the 9 EMA, price action is just running through these things, tagging people out, bearish engulfing, bullish engulfing candles. Like, you're up, 1 hour on a trade and all of a sudden it reverses and tags your stop. These are the type of things that are happening in this market, and you have to be aware of that. All right, so like I was saying, the ATR increases in a bear market. This is going to cause your stops to get hit more often, especially if they're tight. Rallies and sell-offs are going to be stronger, which is a double-edged sword. If you're on the right side of it, you're going to make some more money. If you're on the wrong side of it, you're going to lose some more money. And generally with the way price action is, if you're not sniping your exits, you're going to be on the wrong side of it. Like I said, the chop zones are going to become more intense and extended. People looking for home run trades, and some of you may have already, found this out, you're going to get slaughtered. Okay. FOMO increases in a bear market, especially after that 2-year bull run where you could just buy the open, sell the close. And that's going to be your Grim Reaper. Doing those kind of things is going to destroy your account. All right. So trade with less size and keep your stop based on the average true range or, the daily trading ranges. TradingView has a good indicator for this. It'll give you the ATR for the time frame, and you could just add that onto your stop, whether it's, 50 cents, 60 cents, 70 cents. Take a wider stop, and that is conducive to less size, right? So if you're taking a wider stop, you need less size. You should only be risking a certain amount per trade. You have to adjust your position size based on that. Tip 3, don't try to reason with the market. Don't try to be right. You don't need to be right. It's not about being right or wrong. It's about how much money you make when you're right and how much money you lose when you're wrong, okay? Except that there's high volatility. Your stops are going to get hit more often. In a bear market, hope is decreasing while doubt is increasing. There's a lot more uncertainty and fear in the market, and that leads to high volatility. And what does that mean for us as traders? Your risk of emotional trading increases, which leads to overtrading, tilting, greed, and big red days. All right, there's only a few things we can control, and that's risk management and capital preservation. No big red days. Traders, especially whales, are trading their game plans to accommodate the market, so price action is erratic. It's changing. If you got big accounts taking profit earlier or getting in earlier, then you're going to see those, breakouts fail, those setups not work because people are exiting and entering in different locations now because everybody's scared. All right. So the one thing we can control is losing big. Don't get greedy. Don't start tilting, and don't start overtrading because those are going to lead to account killing. Tip number 4 is don't try for break even or average down. All right, bear market's going to run past support and resistance points. These are overreactions, overshoots, okay? And a lot of the times, these are going to be misinterpreted as breakouts or average down and up points. At these levels, strong moves and reversals can happen violently, all right? And if you're adding to a position and you haven't moved your stop up and all of a sudden you get slapped with a flush, it's going to be a bigger loss than you intended. If you're in a losing position and you're averaging down to try to get to break even, that knife is going to cut deeper. All right, it goes without saying. If you're sizing up or averaging down in these moments, you're going to get destroyed. Okay, the market's going to teach you a very valuable lesson. And the thing is we want to be around when the bull market comes back, right? We still want to have a trading account when the bull market comes back. We're not going to be able to take advantage of the upside after this 30% downside. So keep that in mind. Keep that in mind. You want to still have your trading account to take advantage of the upside when this bear market ends. Okay. Tip number 5, take your losses quickly and humbly. All right. We should all know who this is, right? Paper Hands Portnoy. Don't be a Paper Hands Portnoy. Okay. You could be a Paper Hands, but accept it. All right. Dave doesn't accept the fact that he's a paper handed. And Kathy Woods down 75%. Just take your L's. Just take your L's like a man or a woman, whatever you are, and move on to the next trade. There's always going to be another opportunity. Be humble, or a bear market will teach you to be humble. Accept the uncertainty, minimize the fear, greed, and the tilt. All right. These are the emotions that are going to cause losses. If you're fearful of your setups and taking your trades, you're not going to make any money. You're going to be timid. Okay. That's going to cost you money. If you get greedy, if you're looking for the home runs, it's going to cost you money when you get those 120% reversals. And if you get mad about that and start tilting, you're going to start overtrading, and your psychology isn't going to be in the right place, and you're going to start getting clapped. Okay. Take your setups. Don't get triggered by irrational market movements. Just refocus, walk away, take a break, whether it's for 20, 30 minutes or to the next day, and just refocus. Get back to it, right? It's easy to make money in the stock market. It's hard to keep it. So those are things you want to take into consideration. Now for the bonus tip, for those of you who stayed to the end of this video, learn to pivot and flow with the market. Be like Bruce Lee, right? Be like Bruce Leroy. Bear markets can create multiple intraday trends. So have a bias. One thing I like to do at the beginning of the day is I have a bias, but it's not set in stone. Learn to pivot based on price action and setups. You got to be prepared to trade in both directions on any given day. So instead of being confused or paralyzed by market action and having to be right, I'm long today, I can't take short setups, flow with it. Be like water. Pour your trading like water all over this bear market and flow with it. So that brings me to the end of the video, guys. I hope you enjoyed this. I hope these 5-6 tips help you to survive and thrive in this bear market. So while everybody else is stressing the recession, we're laughing all the way to the bank, baby. And we got a big account at the end of it to take advantage of the next bull run. If you enjoyed this video, please consider sharing it on your social medias. Click the subscribe button, obviously. That is the one thing I'm going to tell you to do on this channel. And click the alert button so you get notified when I post new videos. A lot of good content coming on this channel. I'm excited for it. I will see you on the next one.